Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back for another episode of my podcast. This week, not much changes as usual, but just some newsworthy things I'm going to talk about. Nothing much on Monday, but Tuesday, from as far as my notes concerned, Japanese economies continue to be declining and stay in recession. I think that's the third quarter, so it's not doing well. The pandemic hit it even harder than it's supposed to be. Then Wednesday, I think most people have also heard about it, especially on US news and possibly on YouTube as well. Apple becoming the first $2 trillion company, and I will talk a bit more about that. And Thursday, we got a jobless claim back. Basically, it came back down to up to 1 million last week. We were dropping below 1 million mark for the last 2-3 weeks or so. And Friday, and of course, it's the Tesla's turn. And the share basically gone above the $2,000 mark, so as I understand. And Elon Musk become the fourth richest person in the world, I believe. That's behind Bezos and Microsoft, Bill Gates, and I think Warren Buffett or something. But he's definitely got very, very rich out of this pandemic stuff. And then obviously Saturday, just gone yesterday, TikTok is going to challenge Donald Trump about his executive orders stopping it operating in US. Basically, just stuck to this week first. Two big things that come in that, just like I said before, is the Apple and Tesla here. Both of them fantastic company, but I've said it before, and part of my portfolio, some portfolio basically track these two shares now, especially at the Tesla, and it just a bit got me scratching my head as well. Why these two companies continue to move up with the world still, how it more or less still under lockdown in some sort, and with the spike between the U.S. and China, and then now lately with U.S. trying to get Iranian snapback sanction back up into play against Iran and stuff like that. With the world sort of in chaos and so many things that's happening, and then these two particular big companies, service company, one is selling phone and computer services, digital services. The other one is Tesla selling cars. And just suddenly, Tesla also have the background with SpaceX and maybe artificial intelligence, self-drive kind of thing. These two companies just gone, as far as I'm concerned, when I look back onto the shares themselves, you look at them and then look at the whole curve, back to as many years as you can. And especially for this year, basically it's just more a parabolic move. And as far as I'm concerned, it's just like I'm asking this question: can this kind of things be sustained? But it's a good exercise and also examples of how trend following actually works and how it actually benefit you guys or traders out there. The basic emphasis is this: I mean, that for whatever your view is, including my view, it means nothing when the market say it's going certain way and it goes certain ways. In the case of, let's say, Tesla, it's been one of the most short company before. I think 2 years or so ago, when it broke over like 1,000 mark, now it's gone to 2,000 mark. And lots of people shorting it. There was a lot of short covering, and I think that forces it. Suddenly shot up to 1,000 mark, $1,000 mark, and then come down again, and then just continue going back up again. So similar thing for Apple. We have this year, we're thinking, okay, the supply chain in China is going to hurt everybody, especially in the West. And Apple, of course, have many of its component assembly over there. In China, Southeast Asia in general, with the lockdown, and then a lot of its sales of Apple phones and so forth, supposed to be around the world, because of lockdown effect, it should suffer significant problems with the finances, with the sales, and so forth. But it didn't, as it shows itself, last week, become the first $2 trillion company. But this is the type of thing that's useful to actually say. All the things I just said the last two minutes or so, it's basically like a market doesn't care about what you and I think, and it just go and do something itself. By and large, market is a big ball. As far as I'm concerned, each one of us is really like a sardine, a little fish in the big vast market of the stock market, the sea market, with all sort of different type of big predators and fish, everything running around, and we just, as a, if you have seen this, a bowl of sardines at so natural world or something on BBC or on YouTube, you see the, how a bowl of fish can move certain ways as if they have the brains, even though they're all individual fish in itself inside of this bowl of fish. So same thing similar for this for trading at the moment is that for Apple and Tesla, the consensus, the vast majority consensus around the world say these two company is worth X amount. It's much more than what the fundamentals, or you and I sit down with a cup of tea thinking logically how the company actually can benefit from current situation, either good or bad, and then you will project something, you're thinking towards what the share price should reflect. But the market basically say, well, basically to put two fingers up to your fundamental analysis, so to speak, and then just gone whatever one way. Basically just parabolic move, especially this year for these two companies. We've suffered heavily with in March when it's suddenly dropped, and then with the U.S. Fed dumping loads of money into the financial market, and being U.S. dollar is dominated, basically the reserve currency, and flooding the market around the world, and also other financial institutions in the world economy, and the government also pumping loads of money into the financial systems. These two shares seems to have benefited the most. And it just say that it doesn't matter what you think, what I think, the share just got to run and run these things. So as a point of view for trend following, the way I look at it is more like I think somebody used that before in Asia, and I just try to just piggyback on what they say. Basically, the share market is very much like a car or a train going in a certain direction. You and I may be like a fundamentalist or analysis, whatever, and then just stand sometime in front of the train and say, hey, there's a cliff in front of you. And then the train and the bus just continue. It doesn't care until the party stops. We have that in 2003, 2007 and stuff, when everybody is so elated and say, wow, the stock market is the best place, or the property market is the best place. Now it's looking at the gold market as well. It just sort of difficult to actually, if you stand in front of this bus and you don't jump away when they try to hit you, you get crushed. So those people who's been shorting Tesla or even try to do something with Apple will have get hurt quite badly lately. But then also all those people with the fundamental analysis, just like, looking at these two shares in all, so to speak, why the hell these shares continue going up and up, and as if, the pandemic, which has a lot of business closing down around the world, and many people losing jobs, these two companies just continue to go up with just scratching your head. And so for trend following wise, we basically just say, okay, fair enough, this is what's actually happening to the share price, and don't look at the fundamentals. And that is where it's come from, as far as I'm concerned. This is a good training, kind of speaking, a good example that tells you, when the share price goes one way, stop arguing the market. Do not argue with the tape, like Jesse Livermore say, years ago, back in the 1950s or 1920s, kind of, when the first big bear market in history in America was noted, when he makes 2 million out of that, or 3 million out of that tobacco over there. Back in 1927 or something. Don't stand in front of the ticket tape, and don't stand in front of us. If the market want to go a certain way, let it be. Either you stand aside or join a party. Yes, there may be a cliff. All of us are thinking the share cannot, or whatever company, things like this going up in a parabolic move cannot last. But while it is going on, what is the point of you standing aside? Even though it's fair enough, you at least save your money, but just hoping you should have been on the trade, on the wave, so to speak, and wishing you have make the money, or just buy one share of those days, or whatever money you amount to have, put on those two shares and make money while the share price gone parabolic, and you're riding it. And this is the power of trend following, that you don't really care what you and I think. You don't really care what the market fundamentalists, analysis think, or even technicians think. The share price, the price action, the price movement itself is telling you cooperatively, but people around the world think these two share prices are going up and up end up. It doesn't matter even if maybe there's some other bad things might be happening around the world that can stop this two company in its track progress. What I mean. But in the meantime, while the party's going on, enjoy the parties, jump onto the bandwagon, make some money, and with the right stop loss. And I use trading stop loss using the ATR system I use, and basically just enjoy the party. Take the money. This people talk about it back in 2003, 2007. Lots of people called out the bad things that may happen around the corner, but many people at the same time was enjoying champagne, so to speak, the champagne dinner, eating loads of, for having fantastic food and having loads of money and then driving Ferraris, I think, out of the stock market. But, as you and I know what happened after the party, basically we, the general public, the taxpayer got holding the baby, so to speak. But while the party is going on, it's very difficult for people to give an alternative, different view that is different from the market, and the share price of these two companies just continue to go up. And I'm sure one day they probably do some correction, maybe something heavy, like back in March, that kind of thing. But who knows? Nobody knows when that will happen. So these two, I'm taking these two as a particular example, is to say, when the trade is moving in certain direction, when the trend is established, do not stand in front of it. You either join the party or stand aside. Otherwise, you get crushed. You try to short this type of shares, and you think, oh, this type of share has gone too high, too much, because that's your thinking or your analysis or your thinking. No, don't even think about that. I mean, look at me. I try to think, Tesla gone too much, but I caught it out quite early on, but still continue to go. And now we also see Apple as well now. And there are probably some other shares running around, or some metals, or maybe if you look at the US dollar against the Chinese yuan, it's been shorting all the time. I mean, Chinese yuan is strengthening against US dollar, and it's been doing that for the past 3-4 months. This might continue for a while, but all good thing comes to an end when this musical passing the parcel game. At the end of the day, when it stopped, then everybody get hurt when the music stops. And there's no difference back in 2003, 2007, that kind of thing. And problems is always going to raise its ugly head. So this two I'm basically just use as a good example of basically delve into the type of things that fundamental analysis is good. But when the market doesn't go your way and you're just looking at it on the sideline, either you jump on board or you don't jump on, it's up to you, but don't stand and go against this company. You get crushed. Your account, your trading account will totally get decimated and killed. And the other thing that I missed the week before is, not sure if you heard that, I think you probably read it, that Chinese President Xi actually said, to the Chinese people, stop wasting food. And it might be a bit of a joke kind of thing. Some people take it, not very lightly. But I personally feel that China is basically foreseeing some sort of issue. Yes, wasting food is not just a Chinese issue. It's people around the world, especially developed world. The amount of food that we wasted, kind of food. Just look at our fridge. How many times we have to throw food away? Let alone the food that we cooked, maybe too much as leftovers, and many people around the world have no food to eat. That's one thing. But also, what the alarm bell that's been sound here is China with 1.7 billion people, I believe, with the leader actually saying, conserve your food, don't waste them. It has a hidden message, as far as I'm concerned, that China may be foreseeing possibility of lack of food, and just telling its people to tighten its belt, stop wasting money, stop wasting food on things that there may be something coming up that is seen in the world market as well as own internal market, to find that a lot of food that it needs might not be readily available. Look at U.S. There might be a trade deal for you can say that U.S. is forcing China to buy so many products, and all these agricultural, including soybeans, pork belly, fishery, and so kind of thing, as well as technology stuff or whatever, mechanical machines or something. But on the food front, even if China buy everything, which is gladly to, because remember before the pandemic they have the pig swine, issue from Africa. I think that's what it is, African swine flu, isn't it? And a lot of pigs got killed. They have to buy some more meat anyway, pork, from around the world. And of course, it also have, I think, it's still happening at the moment. It's just not being reported. It's in India, Pakistan, East Africa, those kind of places with the locusts running around, and it's eating a lot of agricultural field and products and leaves and stuff, and then they're having quite a bit of problem. It hasn't been talked about much. It has been sort of noted before the pandemic, but then of course the pandemic sort of taken over on the news front, taken over. But the challenge is still there, that there is possibly a lack of food produce this year, with the fight between different countries about who should buy what, should do what kind of thing, and the trade war, U.S. and China, and U.S. with its own allies in Europe, with Canada, with Mexico, or Venezuela, other people, or Iran or something. On the food front, that there might be not enough food to basically have it for each country to have it themselves. We've seen quite a lot of food wasted. In U.S. probably be reported because the way they produce food, one stream is for people, for you and I, the residential, the consumer, so to speak, who just buy small packs and just go home and cook them. The other one is to big packets and frozen food, and for basic restaurants and hotels and airlines, that kind of thing, and shipping companies. They are not being used up, and so a lot of those one does for the industrial use, serving the servicing the industry, the McDonald's, kind of things like that. They are not being being used, and therefore the cost is actually gone down, and it's not easily to move from packaging, move from supplying the hotels and other big companies and services, and actually to the supply chain to, for example, supermarket. So a lot of food has been wasted, and for example, potato. I read about it in BBC News. U.S. waste a lot of potatoes because the consumer side is taking up a lot of snack, but it's not enough to take all the snack out of the business side that actually supply the hotels and restaurants and stuff like that. And a lot of the potato has been basically just put it back into the earth, so to speak, and wasted, not being sold. And this so it caused an issue in U.S. itself, but what about other part of the world? Now, China can just go and buy some more from Brazil or U.S. or something, other Southeast Asian countries, but it has got a lot of mouths to feed. So sort of this one, Chinese government out of President Xi is saying there is issue. They definitely have found. I think there's some news in China that saying some food storage facility in China, when the executive, the officers go in and check the food level and stuff, they found the food has been mixed with some dirt or something like that. So people has been stealing food or something, selling in the market or some stuff like that. There's things like this going on in China, and I'm sure that the Chinese government heard something, and basically just tell these people to watch out what you actually eat and don't waste food, that kind of thing. Especially the last 10 years or so, or 20 years anyway, that the living standard of China, middle class and the low class as well, actually gone up, and it's a lot more spending money, and then therefore able to eat some more succulent, more useful, healthier food. I remember when I was a child, when I visited in China from Hong Kong, getting maybe a duck or chicken or pork, is being rationed. You get a ticket, food ration ticket, that you're only allowed to buy a certain amount, including oil, rice, clothing, sugar, kind of thing, per month. Okay, that's per household. But now, so long as you got money, you can buy whatever you want. That type of changes has just changed a lot for the last 20 years. So so just like the rest of the world, China has been slowly wasting a lot more food than it before, and just like a lot of developed country, and wasting loads of food. And this time, I think this is something that worth watching out for. And I've been saying this before, near the start of the year. I say watch out the food supply. At the moment, still pigs prices and soybeans prices and oil and grains are quite low. and continue to come down. But I think that might be something that worth watching out on those markets, the grain, the soft grain market, to actually look at. Those kind of prices. It might be something to watch out for. That there might be some sort of sudden move back up if we found around the world that suddenly not enough food, and then so a lot of countries not have to import from somewhere else and just not enough to go around. So just my view anyway. I think it's something that worthwhile to bring it up. I think it's some sort of signal. Just watch how it could be useful for those people who trade on the grain market or belly porks, that kind of thing area. Soybeans, etc. But just something worthwhile. Anyway, next is my update of my weekly portfolio. Okay, so for this week, basically, Apple, like I said earlier, is just continue to be buy across the board. It's going to be parabolic, and we know now it's worth $2 trillion as a company cap. So short term, medium term, long term is a buy. And just see how long it takes it to go. Maybe 3 trillion, 4 trillion now. Maybe the party go the other way. Who knows? But at the moment, everybody's happy. And the bandwagon is continuing to go. It's supposed to go, and it's on the buy side of things. So Apple is short, medium term, long term is a buy. Amazon itself, similar as last week again. Similar as Apple, is just short term, medium term, long term is all a buy as well. Doing pretty well. Next is US dollars against Australian dollar against US dollar. This one's getting boring now. I mean, seen it a couple of weeks ago and a couple of months ago, and just continue to side trade so to speak. And it's just it's still on the buy side, so short, medium, and long term still buy, but it has reached 0.72 mark a bit more, and then come back down again because the US dollar is weakening. Have gone down to like near close to the 92 area, but it snapped back up to 93 at the moment. So US dollar index. So sort of like paused the move of the Australian dollar strength a bit, but it's just more or less still on the sideways trade. So we just nothing different from last week. It's buy across the board for Australian dollars against US dollars. Next is Brent crude and US crude, both basically short term is a buy for both Brent crude and US WTI crude oil. But medium term is different though. For Brent crude is buy, still medium term, but crude oil same as last week, it's neutral. And then long term for both of this crude oil and Brent crude and then WTI is neutral again. So you see a slowly, very, very slowly rise of these two oil products, so to speak. And it's not doing terribly much, but it tick up a little bit per week, and it just continue. We just basically keep an eye on it. Next is DAX and in the Europe. Short term is a buy, medium term is neutral, and long term is a buy. Next is Dow Jones. As I said before, it's same as last week. Obviously, it's just continue to be buy short term, medium term, long term. It's still having a bit of issue after it has sort of touches the 20-day moving average a couple of times, and then it's trying to go back above 28,000, but just stall. It just won't go up. So it's like stuck between this, I think, 27,000 mark to the 28,000 mark. Within this 1,000 points, just up and down, just gone sideways. But as far as I'm concerned, for my analysis, it's still good, even though it's some of stall a bit. But it could be just getting ready for the next bit of bounce. I think if it's follow the S&P 500 as well as the Nasdaq in America, Dow Jones, if it's follow through, I think most likely minimum I would expect at the moment is to reach its previous high about 29,500 area. But that's just my view. I mean, the market might do something else. As far as trend when I'm concerned, the market is still your system telling you, the market is telling you to buy, so just continue to buy. So short term, medium term, long term is a buy for Dow Jones. Next is FTSE, medium term. It's changed. Short term has changed now from last week buy to sell. It's very volatile at the moment, and medium term is still neutral. Long term is still a sell. So for FTSE in UK, it's changed from buy to sell this week. Gold is a sell for short term, medium and long term still a buy. So it's jittery again. Gold, it came back down, of course. Last week or so came down below the 19,000 mark, and this week it tried to go back to 2,000 mark. I think it's briefly touches and come back down again. And so it's not, it's stuck between 2000 and 1900, that kind of area, and just go up and down there. And of course, the US dollar index have something to say about it, but I think mostly other people start to see the gold price had gone up about 30% this year or so. People start noticing it and continue to buy into it. So we just have to wait and see where it goes next, so to speak. Next is Hong Kong index. Short term is now changed to buy from last week. Medium and long term is still neutral. So this one, if you look at the chart for Hang Seng Hong Kong index, it still have an uptrend, and it's the support is not broken. So we just have to wait and see. But as far as trend following concerned, short term is changed from sell to buy last week. There's quite a significant move from I think on Monday, and then it's just come back down a bit at the moment, but still in the buy area. So just continue to buy. But medium term neutral is neutral, so long term is neutral. Next is Nasdaq US. This one just continue. It basically buy across the board, just like Dow Jones. So short, medium term, long term is a buy. So continue to stay the course. Next is Nikkei 225, I think. This from Japan. Short term is a buy, medium term is neutral, long term is a buy. So this one got a bit of sideways at the moment, but it's still short term, and long term is still a buy at the moment, as far as I'm concerned. Silver is following its big brother in gold. It basically have a lot of fluctuations, and then short term is a sell, medium, long term is still a buy. Next is the US dollar against Chinese yuan. Like I said earlier, this is basically haven't changed for about 2 months or 3 months, probably about 2 months ish. It's basically just showing that the Chinese yuan against US dollar is slowly strengthening. It's going up and up and up. So it takes less Chinese yuan to buy US dollars. So it's not good for China export-wise, but China has learned its lesson from back in 2007, 2008, when its main export area in Europe as well as America and around the world is sort of shuttered due to the supply market issue. And so it's tried to do a lot more, internal sales, internal consumption kind of thing. But basically, the strengthening of a Chinese yuan is good for purchasing power, so to speak. But with it good for services and other things, export and stuff, I don't know yet. So, but as far as market is concerned, it's telling us you should continue buy into Chinese yuan against US dollar. Next is US dollar against Japanese yen. This one have changed short term wise, and to sell from buy last week, and then medium and long term still a sell at the moment. So basically across the board is sell. So there's some jittering in the market around at the moment in Southeast Asia, and so the Japanese yen is strengthening a little bit against US dollar, not much, but as far as I'm concerned, it's a sell across the board for so US dollar against Japanese yen. Next is British pounds, again Japanese yen, British pound against US dollars, same as last week or 3 weeks or so. I think about 4 weeks now. Basically, short term, medium term, long term are all buys. So even though with, for me, basically the last couple of weeks more like the A-level result. The week before it's A-level result. This week I think it's the GCSE basically result from the students' national examination result. It just U-turn government the way that they calculate things, but that's just education side. But economics wise, nothing much have changed. Everything seems okay. House having a spat with Europe to try to divorce itself from Europe. There's not much of a deal. Still having problem with China, but seems to getting a lot more cozier with US. So US dollar, the British pound seems to be more strengthened against the US dollars and against the Japanese yen. So just have to continue to track them. So it goes. Next is Bitcoin. Short term, medium term, long term is also a buy. So Bitcoin is a bit disappointing as far as I'm concerned. It broke back, from the 9600 area, which I say sort of stay above. It should be a buy, but I would expect it to be a slow move, continue to go up, but it didn't, and it just basically tried to raise its head above the 12,000 mark, but it's been shot back down again. Still a buy at the moment, but it's gone a bit of sideways trade, so worthwhile to see where it goes. So it's just tracking a little bit like gold and silver, if you ask me. Next is TLT iShare 20 ETF. Short term is a sell, medium is neutral, long term now turn to the buy. So as far as I'm concerned, because the main stock market is roaring, so to speak, going up as expected, and basically people coming out from the bond market. But we just have to wait and see. The bond yield is still relatively low, so it's either the bond is telling me something is wrong, or the stock market is telling everything is great. But you and I know, especially those with job or without jobs, that they get make redundant. Um, Time is tough at the moment in the actual market. Your job and my job probably is not as safe as before. There's end of government helps from around the world, and October is coming. And as far as I understand, there's a lot of whatever benefits that the government around the world has been helping, especially airline, to furlough those people and keeping them on books. Airlines are not flying much, and what happened to those people that have been furloughed if the government stopped giving assistance? The U.S. have tried to give some more money out for those people who still on the jobless claim. Instead of $600 per week, down to maybe 400 or something. But this it's nothing better than actually having a job. And when those benefits stop, which will, the government can only spend so much, help so much, and that will cause an issue. So as far as I'm concerned, the bond market overall has been proven relatively good. But the other thing has been other thing you need to watch out for this bond market is the U.S. government has always been playing tricks with the bonds. Okay, they make it really, really bad outside other places and make people jump into the bond market. Relatively, that means the cost is low because lots of people want them, and therefore the yield, the interest rate they have to pay is very, very low, so can borrow cheaply. Against, let's say, some other country in Europe, for example, it's got negative rate. US still, the dollar still give out at least some money back, so to speak. But it's, as far as I'm concerned, U.S. government probably playing tricks here. So one day suddenly there will be a big drop in the bond market. And at the moment, I think just be wary of these two markets. The stock market saying everything is happy, but you and I know on the ground don't feel it that way. And then the bond market, there's a big hoo-ha, it's going on. Everybody jumping into the bond market, and even though the yield is so low, it's just significant. It's basically telling you historic-wise, that means something is going on. So it sort of matches what we feel in the market. But with historically, the U.S. government played tricks, and this is what the Asian people call it, especially in China and Hong Kong. Financial piracy. This is what the Western world, especially here in U.S., basically the U.S. government go play tricks and basically rob people around the world to help it to balance the balance sheet, so to speak. So watch out for that. If the bond market suddenly collapse and the yield increases and the price drop down, get held out. You can go in later on. But so at the moment, short term wise, telling you to get out. Medium term is still neutral. Long term is still buy. So we just wait and see, but do watch out. Next, last but not least, is Tesla, which I talked about before. Inspired across the board, like I said initially, when I first introduced it about a month ago into this sample portfolio, I thought, the share Tesla just got too much of a parabolic move. Now, Apple's doing similar thing as well. But the party is not stopping. The musical chair is still going on. Just the parcel is continuing, and just the share is continuing going up. So as far as trend following is concerned, it's buys changed from last week already. So this week again, continue to buy. How long will the music last? Who knows? But as far as trend following is concerned, we just get on it. But do watch out your stop loss. If the market turn, get out. And the other thing I forgot to say is, if the market turn for both Apple and Amazon, please do not marry your position. If the price is gone and touches your stop loss, I hope you have a trading stop loss. Please. Trading at the moment is nothing to do with getting the right trade and make millions out of dollars. The money here is actually what you need to think of is what Robert Kiyosaki said. It's not how much money you made, it's how much money you keep. You might be feeling very rich at the moment, having these two shares in your portfolio and thinking loads of money is in your pocket, great. But watch out when the things turn, when the wind turns, you better jump and jump quickly. Do not marry to these two companies. If the price is, or any share price or any forex exchange or any gold coins you might have, if the price collapses on area and touches your predefined stop loss, get out, and it continue to go down. Short the bugger. Make money that way as well. Okay, this is basically my update for this week, and I will speak to you next week. Bye for now. Have a nice week.